The following is a presentation of TFNN. Live at TFNN, The Money Masters. Now, The Money Masters.
Welcome to the Money Masters show, folks. The Dow off 10 points right now. S&P flat. Composite off 2. Small caps down 1. Relatively flat marketplace out there. Our call-in number is 877-927-6648. Great moments, folks. Great moments are born for great opportunity. And that's what we have here. One decision, one action, one piece of knowledge that'll change your life. Today, folks, you are the greatest trader in the world. You were born to be a money master, every one of you. You were meant to be here. This is your time. Let's go seize the moment. Let's go take a look at this market, see what it is that they're doing out here. Let's start with Apple. Let's go take a look, see if they're making any applesauce here in Apple. It's trading out at $526.43. That is, what is it? It's up 29 cents. So a flat day out here. We know Apple is struggling here. Had a nice reversal signal, the bullish engulfing candle that came in on December 17th as it was testing that hammer candle, that big hammer candle that was out here from the 16th of November out there. In fact, you had a nice follow-through session on December 18th, but that is where it has stopped. It has lost its traction. Let's go take a look at the retracement here, just simply off of the December 3rd high all the way down to the low out here. Let's put this in black across the screen so that you can see it. Let's get rid of a couple other lines that are out there. In fact, folks, if you are listening to us on the radio or maybe your mobile device, you can always catch an archive of this show on Channel 9. We love you listening to us, however it is that you do. Make sure that, you take advantage of all the technology that is out there in the marketplace. What you can see here is that Apple stopped at that dead cat bounce area. Now, Apple on the daily chart, that's what we're looking at as a daily chart, got down into that oversold condition. Very important to be paying attention to that as it was testing the hammer, as it was forming a bullish engulfing. The first floor of the elevator in the, when you take a look at stock markets between swing points is going to be 0.382. So you want to be aware of those areas. And then you want to take a look at, well, what's the volume doing as it's coming up into that area? Well, in this case here, you just simply move over to the left-hand side. You take a look at the December 13th volume. That was 22 million shares. As it was getting some follow-through, 22 million shares. So really in the tug-of-war, that's kind of even-steven out there. No real information that Apple has provided to you. If you do get a close back above the high of December 18th out here, which would be 534.90. What that sets up a ride to the next level on the elevator. That would be Suite 618. So make sure you use your retracement ruler. Make sure you're using 0.382, 0.618, 0.786 out there. Those are the numbers that you want to be able to have. The actual 0.618 retracement level, $558.93. That's if and only if Apple can get some traction. You could just say that what Apple is doing here as it got down into this oversold territory is it just simply bounced up to the dead cat area and moved sideways. If this thing moves sideways here for a couple days, especially as we come into next week when the market can easily be pushed around here, be careful of being in this equity because all it's doing is working off an oversold condition to make what? To make its next leg down, which is a doozy, folks, because you're talking about at least a 200-point move. The reality is you're looking at more than a 200-point move on the way down. Right now, Apple not giving you information, but the longer it travels sideways and the more that it works off that oversold condition, the more difficult it's going to be for Apple to try to move higher out there. Let's go take a look at some of these other. Well, let's start off by taking a look at the indexes. So let's switch over to the indexes. That's what we do here. And first, we're going to start off with, of course, the New York Stock Exchange. New York Stock Exchange right now up a few points. It's up about 13 points, trading out at 84.47. New York Stock Exchange yesterday testing an area of resistance. An area of resistance, just simply a swing point. That swing point had not been tested until yesterday. The swing point we're looking at is the September 14th candle. That candle there, the high of that was 85.15. what the New York Stock Exchange did yesterday, got up to a level of 85.19, rejected that area, did not give you really a bearish candle. Yes, it closed lower. Yes, it tested that high, but that did not form any type of reversal candle. Was a test of the swing point high. You test that a few times and you can't bust it up. What will happen, folks? You'll bust it down. In the New York Stock Exchange, this is important to be paying attention to because it's the wider breadth of the marketplace out there. New York Stock Exchange also getting up towards what? Towards that overbought area. Each time the New York Stock Exchange gets up here in this level, it tends to reverse. Take a look at right here at September 14th. Moved up into that extreme level, got it to a reading of 76.94. Hasn't gotten to that far extreme, but it's right up against here. You now got a little bit of a double top. You need to have more follow through today, whether it's today and or tomorrow. What you want to see here, if you're a bull, what you don't want to see is you don't want to see the New York Stock Exchange move below 8408.20. Not just move below it, but close below 8408.24. That'll set up a run down to a support area that has been tested on the NYSE. It will show you what that level is. It's right here. It is the top of this gap. This window here is still open. As we draw this across here on my screen, let's put a line on it. We'll go ahead and put the red line on here. That is the high of November 21st out there, 81.12.92. If you do get a close into the level of 8408.24, that is where the New York Stock Exchange will run down to. Let's go take a look at the other indexes out here. Let's go take a look at the SOX. Let's start off with the semiconductor index, the SOX here giving you a reversal signal yesterday. We'll see if there's any follow through on this today. Let's go ahead and get rid of a couple things. Okay, so we take a look at the SOX. The SOX here yesterday moving into a resistance area as well. Take a look at that resistance area, and that is the swing point, the gap down high of September 24th out there. That level 391.82. You can see the SOX came back up and tested that back here on December 12th, 2012, 12-12-12, rejected that, did really a small pullback, went back up and tested it again yesterday. Now we've got a third test of that area, and yesterday giving you a shooting star out there. It's an inverted hammer in essence, so you got a shooting star. Inverted hammer should be at the bottom, but it is just helping you to mentally go ahead and reverse it. So now you had into a resistance area on the SOX. You also got a reversal candle. You get a lower close today. You can see it did trade down as low as 385.78 out there. It's off of its session lows. Still, just any lower close today would be confirming that what that sets up here is it sets up a run down to the most recent swing point. It's not that far down to that area. That would be in the 379 level. Get it straight at 388.99 right now. So that is on the SOX. Let's go take a look at the S&P 500, see what the S&P 500 cash is doing. Yesterday we showed you the Gartley sell pattern, a beautiful Gartley sell pattern. That pattern actually held, which is really amazing. It's why you want to understand your Fibonacci numbers out here, because when you take a look at the two up thrusts that the S&P had, the first one being December 17th, that there, we call that a type 1 candle, meaning type 1, lots of power in it, as well as on December 18th, also a lot of power. Yesterday's candle was a reversal signal, a mild reversal signal, medium rare reversal signal, that being a dark cloud cover. So it's kind of in the top 5 reversal candles. It's really about a 2.5, based on where that closed. We'll call that a 2.5 to a 3 out there. What you can see, though, is that the magic was done by Leonardo Fibonacci. We're taking a look at a .786 retracement. You ask me, you say, what does that mean, Steve? Very simple. Go from a swing point high. Just start with the major intersections on a stock chart. Don't get too consumed up into all of the moves up and down. Just go to your major intersections, just as if you're driving along. The major intersection where you see the large change in trend. In the case of the S&P 500, that's going to be your September 14th area. That's the swing point that you would use. Your next swing point where you see another major trend is the November 16th area. That's where the low was put in. If you go from high to low, what you can see is that the .786 retracement area is in essence the high that came in on December 18th. On Tuesday out there, that level is 1448. So that becomes, so that was a .786 that also happened to be an expansion of swing points. This one always throws people for a little bit of a loop, but that's okay. I'll throw you for a little bit of a loop. You can catch the archive of this show and just simply replay it on Channel 10. Of course, if you would like HD charts, folks, what you should do is, and this is a great time to do it, is just simply become a member of the Den out there. It's like $1 a day, and the charts inside there. So if you're having trouble reading the charts as you watch on Tiger TV, just join our Tiger's Den. Everything there is in HD. Now, if we take a look at expansions of swing points, the swing points, basically your B to C of an A to B equals CD up that had completed. You're looking at the swing point high of November 23rd out there, 1409.16, and your swing point low is November 28th. If you take that difference, and low of that was 1385. If you take that difference in math, multiply that times 2.618, that too will get you right up to the 1448 level. You just want to be aware of those numbers on expansions. You're looking at 1.272, 1.618, 2.618, and because it's the holiday season, a little pie every now and then, 3.14. That is quite a expansion. You get expansions beyond that. That tells you that you have a very trending market, to either the upside or the downside, just depending on the direction that you're taking a look at. That gives you a 2.618 expansion, so you got two Fibonacci numbers that came together at the same time. The market did really what it was supposed to do. Now what we need to see, if you are a bull, you do not want to see a close below the session from Tuesday out there. That low is 1430.47. And if you're a bear, you want to see it close below that. That will give you a 2-day bearish engulfing candle out there. That will give you a that'll move the signal from what we'll call a class 2.5 to a class 3.5 reversal signal out there, and especially as it formed a buy pattern. Of course, if there's going to be a move down, what we can see here, take a look at that red line going across the screen here. A lot to be learned from any of these stock charts. That red line going across the screen, that is horizontal resistance, or I should say, that was horizontal resistance out there. That was established by the downdraft or the high of October 23rd. That level was tested. That is the 1433 number. That was tested here, and there was a reversal on November 2nd. That was tested on November 6th, and then you got that nice reversal signal. Bearish engulfing candle out there. You got a little shooting star as well, testing that on December 12th, 12. And so we had reversal signals out there. Excuse me there for a moment. Just needed a little bit of a sip of water just to re-energize that Energizer bunny within me. And so what happened was that was horizontal resistance, a close above it, slicing through with a number one powered candle out there on December the 18th. Old resistance becomes what, folks? Old resistance becomes support. So for the bulls and the bears out there, you can see that what the S&P has done thus far today just simply came back and tested an area that used to be resistance, now has become support. And if you're a bear out there, now, because you've tested it, you want to see it close below that today. That means a close below 1433. Traded at 1438 right now, 877-927-6648. Dow's up 5, S&P's up 2. We'll be right back.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
Happy holidays from TFNN. Our most rewarding Tiger Dollar sale is back this December at TFNN. Normally, we offer only a 10 to 20% bonus on Tiger Dollar purchases, but through December 19th only, when you purchase Tiger Dollars to spend on any of our products, you get a 25% bonus on your purchase, and up to 10% of whatever you spend will be donated to the Salvation Army in your name. You'll receive a personalized thank you letter directly from our local Clearwater Salvation Army administrator in appreciation of your donation. Tiger Dollars can be used on any of our newsletters or subscriptions, never expire, and are fully transferable. Take advantage of our most rewarding Tiger Dollar sale of the year right now. Visit TFNN.com for all the details and to make your purchase today. Happy holidays from TFNN.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, folks. I love getting cards and emails. Really, it's just emails, digital emails, obviously, digital cards, I should say, emails from all of you out there. So thanks so much during the year for each of you doing that. I do get back to everybody out there. Just got an email. I try to check them in between the breaks if I'm not looking at something else. Just got an email here. Says, thanks for all your help. My trading is now back on track. Boy, that is a beautiful message. I took your candlestick class, loved it. I'm a subscriber to the newsletter, too. Cannot believe all the information you put out daily. Folks, do yourself a favor. If you want to educate yourself on trading, the whole idea is really to be able to compress decades into days or hours. That's really what it is that I do out there. I do all of the work. I've gleaned everything out there and just give you the best of what it is that you need to know. There's education in my newsletter service, Mastering Probability. You'll see a link on the front page of that. This is a great time of the year for you to spend some time and just educate yourself, even if you're going to use the service for only 29 days, because there's a 30-day unconditional money-back guarantee. Do yourself a favor. Allow me to give you that gift of education, because included inside the newsletter, I do live workshops, usually every other Wednesday. So there's 20-plus hours worth of education in there that are included with the newsletter service, so you can watch those at your convenience. So go to the homepage of TFNN.com and check that out. Tom is out buying real estate today, and when the Tiger's away, the mice will play, and that gives each of us an opportunity out there to take advantage of the Tiger Dollar promotion, still on the homepage at tfnn.com, the last time that I checked out there. So if you just simply forgot to do it, go on over. You can make 25% of your money. All the details on the homepage. It'd be a great opportunity for you to take advantage of. So in the S&P 500, on the S&P Cash, gave you the areas of support, resistance out there, where the close needs to be, what you're looking for if you're a bull or a bear. In the case of the Dow, it's a little bit different story out here. In the case of the Dow, the black line going across the screen that we're looking at here, the bottom black line is an area of horizontal resistance out there. That resistance sliced through on Tuesday with a type 1 candle out there. Of course, the pattern that it was completing was a 0.786 Gartley sell pattern, and it was also coming back, and the Dow had not. So this was, well, I take that back. The Dow, this is now the third test, trying to get back inside the trend line. That's the trend line that goes to the lows of October out there. So the Dow not being able to get into the trend line, moves up, forms a 0.786 Gartley sell, gives you a little dark cloud cover candle, but yesterday the close was back below that resistance area. So that has not held very well in the Dow as a support area. In fact, it didn't hold at all. It got over it one day, came back, and on the test, right back inside the lower part of that range. What does that set up? Well, number one, what are you looking at for bulls or bears? You got, as I say, about a type 2 dark cloud cover yesterday. If you are a bull, you don't want to see it close below 13,232. Of course, that will just set up moving back to the most recent swing point low, and that is the area of 13,118. You close below 13,118, that sets up pulling back most likely to the November 28th area, and that being 12,765 out there. So a little bit different setup on the Dow than we took a look at in the S&P 500. But you got the New York Stock Exchange, that rejected a swing point high, September 14th. You got the SOX, which these markets are not going to move higher without the SOX. That rejected a swing point high, trading a little bit lower this morning. You've got the Dow. That has given you a potential reversal signal out there. You know, how much louder can the microphone get? That you should absolutely just be careful out here. If we take a look at what the Russell 2000 did, the Russell 2000 yesterday, not really just giving you a timeout candle. That was a doji coming into a resistance area that happens to be both the downdraft of September 25th. This one is not as clean as the others, as well as the high of October 5th out there. The high was not tested. That would be 853.57. Yesterday got up to a high of 851.83. The Russell 2000 right now a little bit stronger than the S&P and or the Dow, but yesterday and today's candle so far, a doji just simply means it has had no movement. But when you get up into resistance areas and you get those doji candles, that is also a warning shot as well. What have we left out here? Oh, we left out the NDX 100. Let's go see what the old NDX 100 is doing out here. So the NDX 100 getting up into resistance. That also was an area that was tested, and it did not hold as support. Should have held as support as the NDX moved up through it on December 18th, gave it up in one day, in one session. Not a reversal candle signal out there, but back inside the lower part of that range out here. That says the NDX 100. It's got a little bit of a gap out here. That is December 17th. If you're long, you do not want to see it close below 2664. If you get that, then the next target is going to be 2620 for you, but more likely come back to the real support level at about 2614. 877-927-6648. Hope you're having a fantastic Thursday out there. We'll be right back.
You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
Welcome back, folks. Still a flat market out here today. I suspect flat today. We can see some flatness here for a while as we come into the full swing of the holiday season. I've got the financial sector up on my screen. Clearly the strongest sector with inside the S&P 500, trading out at 1660 right now, making more than a 1-to-1 A to B equals CD. Up, and let's go take a look at this. Let's see here. So far, it's surpassed the 1-to-1.272 area. Up just a little bit higher at the 1670 mark is 1-to-1.618. Let's go start taking a look at expansions of swing points now. The expansion we're looking at is going to be the swing point from September 14th, that high, which is 1644, down to the low that was put in on November 16th. That level is 1506. 1-to-1.272 also about the looks like about 1682. This could be setting up a 1.272 a butterfly sell pattern. So let's go actually draw that in on the screen here. And one of the easy ways to do it, folks, actually I just kind of gave you, I'll walk you through it one more time. makes it a little bit easier. So if you're taking a look at, you're saying, well, you don't understand, what a Gartley or a butterfly pattern is. Let me show you how you could actually go ahead and draw it here. We'll just get the lines off of the screen here. Want to take them all off? Yeah, we can take them all off. We'll make it nice and pretty. So why not? It's the holiday season. Why don't I show you how you can do this? Because some of you will not have the tool. If you're not using Ensign Windows, you don't have the tool to draw on the nice colorful pattern, to see those wings in color. So how is it that you could actually create that pattern or visually be able to see it on your charting software? Well, number one, if you're creating a butterfly pattern and you want to know where those patterns are at, what you do is pick out the most significant major intersections or swing points. That's really what I'm referring to as a swing point, where you see changes in trends. In this case here on the XLF, and it's the higher high, so you're going to choose September 14th. You're going to choose September 14th versus the candle from October 18th. October 18th, the high was 1639. You had a high out here of 1644 on September 14th. So now just take your Fibonacci expansion retracement tool, go from the high all the way down to the low that was put in on November 16th. Now you can see the way that I have the tool set up in my system is I show retracements and I show expansions. In this case here, we're looking for an expansion. I'm going to go ahead and shorten the screen. So an expansion from that high, and you can do this mathematically. You can check it out right now if you got your little calculator out there. Maybe it's a big calculator. Maybe it's just a spreadsheet. The high of 1644 from September 14th, you do the math, down to the low of the swing point low on November 16th, which is 1506. Take that dollar difference or cent difference, whatever it is, multiply that times 1.272, add that to the swing point low, the November 16th. That's going to give you the price projection of 1682. A 1 to 1.618 out there is going to be 1729. You got to wait for the candle signals to tell you when price is going to stop. Also, even though it says 1682, folks, we're looking at a range. We're not looking at an exact number. We're just simply using that as a marker out there. The candles will really tell you when the move is over. Inside the financials, we have not seen that. Yesterday on the financials, the XLF looks like it too set up a dark cloud cover. But that is being rejected here. So let's go take a look at that's one of the ways that you do it. The other, additionally, you can take a look at ABCD patterns, but I'm just simply going to show you how to take a look at expansions of swing points. Just going to keep this simple. Now I'm going to go ahead and draw that pattern in here. We'll see what that butterfly pattern looks like. And it looks to me like that is where the XLF wants to move up to. You can also see the expansion of swing points here, your B to C leg, 3.27. Close enough to me for good old hot apple pie or pumpkin pie or whatever kind of pie it is that you might eat on Christmas Eve or Christmas Day out there. I think I'll have a little bit of both. So that's your 1.272 butterfly. Looks to me like the XLF wants to travel into 16.82 as the price point. Let's go take a look at the energy sector, see what the energy sector is doing out here, see if there's any reversal signals here. The energy sector, moving into the downdraft area. This was an area that was an area of resistance. I'm referring to the low of October 22nd out there, that price, 72.72. That area held as resistance. It was tested here on November 6th. It was tested with looks like a shooting star candle or close enough to it on December 12th, 12. However, sliced right through it on Tuesday, came back really right to that area, even though it's just a little bit below it, came right back to that area that held as support. You're still trading there. If it doesn't close below, let's say it doesn't close below 72.72 is the number, but give it just a little bit of room out there because really it's a guideline. It doesn't have to be an exact number out there. If it does not close below it, what the XLE wants to do is travel up to the swing point highs. That'll take you into October 18th out here in the 75.19 range. If we take a look at retracements, so let's go take a look at our retracement ruler out here. Let's go from the high all the way down to the low out there. What you will also see is it kind of is going to run into a little bit of resistance right here at the 0.618 level, so just a little bit higher, 73.69. So that's where it'll find some, just simply some Fibonacci resistance. That's on your energy sector. Let's go take a look at, let's look at the, we haven't done during this show here, we haven't done gold and silver. Let's go take a look at gold is getting a whack down 1 3/10%, not as bad as silver. Silver's off 3 7/10%, almost off 4% here. Let's take a look at gold here. Gold right now moving down to the 618 retracement area. That is $16.12. 37 cents. It's trading out right now at 1646. Volume, not too bad so far. 119,000 contracts. This is really setting up a Tiger Gartley buy pattern. It's not there yet. It's not complete. Got to let the bulls come in, give you some kind of signal out here. You got King Dollar is back 8 ticks right now, but gold certainly moving down. So, and it's trying to establish a low. It's getting into the oversold area. And so looks like 1629 may be the mark, or perhaps it's going to get all the way down to that 1596 level. That would be nice because there probably won't be any buyers there other than all of you tigers out there. Let's go take a look at silver, see what silver is doing. You can see silver moving back to the 0.618 retracement level, getting below the swing point here from November the 5th. That swing point on the continuous contract has got 62,000 contracts from a volume standpoint, has done 50,000 today. This may not be setting up a Gartley sell. Instead, this might be giving you a confirmation of an A to B equals CD down. We've got your, let's go from the A to B to C, and what you'll see, it's already made the 1-to-1. However, coming through there with volume, the 1-to-1 is $30.02, getting also to the 0.618, getting into oversold, does say that we should suspect sometime in the near future to see a little reversal on silver out there. That's setting up a nice buy. Whether it's going to be here in this 618 level is going to hold, or whether it's going to move its way down into the $28.10 level, only the bulls will tell us, because they will give us the signal. We'll see a reversal signal. I can guarantee that for you. That's on silver. Platinum also getting whacked out here. Platinum's off 2% this morning, down 33 bucks. Natural gas having a good morning out here. Natural gas is up 3 3/10%. Natural gas, as we pull this back, this had completed a 1-to-1 A to B equals CD, almost getting back to the bottom of the rising price channel out here. Not getting quite down there, but it did give you the bullish engulfing candle on the 17th, as well as confirmation on the 18th, trying to move on up out of here. Where could the natural gas contract move to? Well, as I pull this back, what would you say? Tests the bottom, moves to the highs, comes back to the bottom, back up to the highs, back to the bottom, back up to the highs, back down towards the bottoms. That's right. So natural gas could run all the way back up to the highs. All we need is a little bit of cold weather out there, and I think that we do have a chill running through the Midwest. So if you are traveling out there, I hope it doesn't interrupt your travel plans, but just take along with you tfnn.mobi. All of our shows replay 24 hours a day. Great education. This show here is archived on Channel 10. That way you can go ahead and review the expansion of swing points out there. The King, let's go see how the King is handing, what do I want to say? Let's go see how the King is, let's just go see the King. Forget about what I'm going to say next. The reason why we're taking a look at King Dollar, putting in a hammer candle here yesterday, trying to move back down to those lows and test that area. So far, a rejection of that level. If this does reject this level here, we will see gold and silver sell off for sure, but they have become uncorrelated, disconnected. Just trade whatever chart it is that you're looking at. Don't put too much, don't try to combine it with too many other elements. So you got a hammer candle being tested in an area of resistance. Let's go put up the relative strength. We haven't done that here. Let's go do that. You can see moving down towards that oversold level. If you get a close above yesterday's close, which was 79.39, that will say that the King has rejected lows. It has put a line in the sand. That's at 79.01. Only if you get a close below that. And if you get it close below that hammer candle, the next area of support is going to be the lows of September 14th out there, and that is at 78.72. Let's go take a look. As long as we're in the currency marketplace, let's go take a look at the U.S. dollar Japanese yen currency pair. This really getting above the swing point out here from March 15th out there. This doesn't seem to want to slow down. However, you got to be careful. You got the Japanese yen. It's in that extreme area of being overbought. You can see what happens when it gets up here. Usually you see either a move sideways, which we haven't seen here just yet, or you see a little bit deeper retracement out there. That's what we're really looking for to set up a possible buy pattern here for the U.S. dollar Japanese yen. It has had a nice move. Let's go put this on a weekly chart, a monthly chart out here on the Japanese yen, which you can also see on the weekly chart. The Japanese yen up against what we'll call a 1, 2, 3, a quadruple top area here. So it is up against an area that has held so far as resistance. That is the red line going across the screen here. You can see that line could be moved up a tad, down a tad, but that is where it is up against. So in order to really break out and prove itself, it's going to need to truly close above, we'll call it the April 8th week. That level out there is 51 out here. Now you can see on the weekly chart, as you've gotten into, on the weekly chart even, this has gotten into the overbought area. So most likely we will see some type of pullback in the Japanese yen. You can see it can move higher, most certainly, but let it prove itself to you. If it does break out above the highs from April 8th, might be a good continuation trade. However, at this stage, I would just be patient and wait for a pullback. Try to buy some weakness out here. Let's go take a look at the Queen, see what the Queen is doing out here. We'll take a look at the daily chart of the euro-US dollar. Yesterday, forming a doji at a resistance area. That was the resistance of the May 1st high out there. Today, right now, that candle that we're looking at, that is a high wave candle. The euro telling us that it has lost its way at the moment. That might be setting up a pullback. It was almost an A to B equals CD that had completed. Didn't quite get up there. So if the euro takes out yesterday's highs, that's where it will run to. But I suspect it actually would run a bit higher. Maybe make more than a 1-to-1 A to B equals CD up. Probably make a 1 to 1.272. But right now, it's saying it's a little exhausted. You can see it has really worked its way off of the lows out here as it got into the oversold level. That was when it was making dojis at the bottom. Interesting. Did you just hear what I said? Was making doji candles as it got tired at the bottom, as was moving into the oversold area. And now, as we are into overbought, yesterday we had a doji. Today, doji high waves, similar in style from a candle standpoint. I wonder, do you think that patterns repeat themselves? Something to think about. More than something to think about, you know that patterns, you have rituals each morning. You know it, each of you out there, and the markets have rituals as well. It's nothing more than the psychology of a group of participants out here. It's why you want to really understand and read and really entrench yourself, immerse yourself in candle signals out here as patterns. If you're looking for a place to start, folks, that is the place to start. Because then you can understand the psychology of the marketplace. You need to be a psychiatrist. You need to be your own best psychiatrist if you are going to go ahead and play this game. And this is the best game on the planet, managing your own money. Just imagine, if you could teach your children anything, any one thing, what would it be? Well, how about top 5? Because there might be some things out there. But if there was one thing, so I'm back to the one thing, because I say if there's one thing out there that you would want to teach your children, you would want to teach your grandchildren, wouldn't it really be about how to manage money, how to truly live within your means, all of the things associated with money out there? Wouldn't that be the best lessons for youngsters? You know, maybe you've got some kids that are, just getting out of college, or they're struggling, they're young, they're trying to figure out what to do. What better gift than investing in them and having them start to learn this system out here? Because, you know, these systems out here, we take a look at these charts. They may look like gibberish to you, but if you spend some time, they'll all of a sudden it'll become artwork. It'll look like artwork for you, and you can teach them how to manage. I mean, when people are struggling to figure out what to buy, folks, for gifts, a lot of times it's just unneeded garbage. Yet this is perhaps one of the most needed things, and it's not taught out there. It's certainly not taught in colleges, not taught in high schools. It is taught at one university that I know of. That's called Tiger University, right here, right now. Folks, take advantage of that Tiger Dollar promotion that's still out there. Buy your children the gift that will keep on giving. And while you're resting, you'll know that they're out there making some money for you. That's how you put your kids to work. 877-927-6648. Really flat markets out here. We'll be right back.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to tfnn.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to tfnn.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success, and it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
This segment is brought to you by TFNN. Test drive all the newsletters for free at tfnn.com.
Welcome back to the Money Masters show, folks. In the inside the Dow, leading things to the downside. Not what you want to hear is IBM. It's off $1.50. That's the number one weighting inside there. The number two weighting inside the Dow, Caterpillar. That's off $1.13. So we'll go take a look at those two stocks as well. Number 6 in the weighting structure is ExxonMobil. We'll take a look at ExxonMobil also. Pop into the upside. You got Procter & Gamble. That's up 82 cents. Number 10 weighting, JP Morgan, is the 17th weighting. That's up 55 cents. 3M up 44 cents. That is the 5th weighting inside there. As we take a look at IBM, let's go see what IBM here is doing back inside the lower part of its range out here. IBM yesterday giving a reversal candle. That was the last time you saw a reversal candle like that. I'll just blow this up on the screen here. Happened to be the last time was November 6th. Look at the candle there on November 6th. That there is a shooting star or close enough to it, and you got close enough to it yesterday as well on December 19th. Volume yesterday 4.2 million shares, going into the 3.2 million share day on the what's that day? November the 6th out here. So you can see this area here, this black line going across the screen. Really, that was the area of old resistance out there. That window got repaired and was fixed, so I don't really use that any longer. But in fact, I'm going to erase it off the screen here in the next moment or two. But you can see, and the reason is because you just simply, IBM went ahead and got above that area, repaired that window. The work was done. Once you repair a window, no reason to even keep it on your screen here as an area of support or resistance, unless, that is, it holds as an area of support. In this case here, we can see that did not happen. IBM got above that level on December 18th on Tuesday. Got a reversal signal yesterday. You're getting follow through this morning. Sets up IBM. Right now, the move right now is only going to be down into the December 14th low, 191. However, volume there is 3.8 million shares so far today. In a little over an hour of trading, it has done 1.3 million shares. So you got some volume behind the move in IBM. So you want to keep your eye on that. Caterpillar giving you a real reversal signal here yesterday and then today, because you've got a gap down here. Number 6, 5% of the weighting structure within there. Why do you want to understand A to B equals CD patterns and retracements and so forth, and candles? Why do you want to be able to put it all together? Well, it's how the market communicates to you. So it would be very hard to do anything without understanding the language. If you take a look at A to B equals CD here, November 16th low, $80.16. The high, the B point, is November 29th. That level is 86.48. Move on down to the retracement, and that retracement there, probably a 0.382 retracement into December 4th. What you can see here is Caterpillar making a 1 to 1.272. A to B equals CD. That price point projection, by the way, $91.62. It only made it to 91.82 is the number, and I apologize. It only made it to 91.83. How do you like them apples there, folks? That's why you want to learn your A, B equals CD patterns, your lightning bolt patterns out there, giving you also a shooting star, and then today gapping down. Volume-wise today, 2.5 million shares so far. And so this here, you can see the next stop, quite frankly, the next area of resistance could be, it's not even going to be there. We're going to get rid of that. Really, where Caterpillar wants to now run down to is back down to the swing point of December 4th. That is at the $83 to $85 level. If we just simply take a look at retracement of that A to D leg out here, that's probably going to get us in the sweet 618. Most certainly it does. 84.82 is sweet 618. Just like all you folks out there, you absolutely are sweet. Thanks so much for being here. Stay tuned. Basil Chapman is up next. Larry Pesavento from 12 to 1, Daryl Martin 1 to 2, David White 2 to 3, The Ken Shreve Show from 3 to 4, and Tom O'Brien will be back with you from 4 to 6. Have a great day, safe day. If you're beginning your travels, be safe out there, and I'll look forward to seeing you after Christmas. Otherwise, see you tomorrow morning, 9 o'clock. Take care, folks.